What is up, you guys? Today we're going to be talking about real estate. If those of you who do not know and you've been following this channel for a bit, or my other channel, Traders Helping Traders, real estate is a huge passion of mine. Buying my first rental property was really what allowed me to take a lot of the risks that I ended up taking in my life, because I was living essentially for free. I was actually making profits off of that property. And then when we sold it, it was worth significantly more than when we originally purchased it. So that allowed me to take a lot of the risks that I've taken in my life to start my companies, to become a full-time trader and a full-time investor. And I haven't really been talking a lot about those videos here on this channel, just because the real estate market really has not been where I want it to be in order for me to enter it, or to really even talk about potentially buying another property. But we're starting to potentially see a top here. So I want to start covering real estate more because it is a huge passion of mine. So if you guys want to see more real estate videos, how to buy real estate, how to buy the real estate with zero money down, how to do a lot of crafty financing deals, how to find a good property, how to find if a place is undervalued, comment down below. I can basically teach everything I've ever learned about real estate, which is a lot over my 5 years of doing this. So I'm making this video though because mortgage demands dropped to a 22-year low today as higher interest rates and inflation crush home buyers. One of the things that you guys are going to notice, and you guys have probably noticed if you've bought a house in the past couple of years, or you've just been watching the real estate market, is that purchasing power back in 2020 and back in 2021 was much higher. Number one, inflation wasn't quite, if we're looking at 2022, was not near where it is right now, and rates were massively low. Back in 2017, I bought my first rental property. I think that my interest rate was something like 4.3, 4.4, which I have an 820 credit score. So that was one of the best rates that you could get at the time. And I just bought another property in 2020 where my interest rate is like 2.1. So cut my interest rate nearly in half. And if you're never somebody who has purchased a property or had a mortgage before, what you have to realize is that 2% is massive when it comes to purchasing power. That 2% could be the difference between your mortgage being $3,000 a month or $3,900 a month. And unfortunately, which you shouldn't, but what most people do is they don't look at how much the property costs. Most of the time when they're buying it for themselves, they look at how much is the monthly bill going to be? How much is my mortgage going to be? Especially with a 30-year fixed, which is the only loan that I personally would do. Wouldn't do like a 15 or a variable adjusted rate. But a 30-year fixed, you know that your mortgage is going to be roughly around this, except for whatever taxes are going to end up being. Purchasing power has dwindled a lot within the past 6 months. As purchasing power drops, we're going to see less and less people applying for mortgages. But the reason the market hasn't crashed, and we're going to talk about this in a bit too, is that still demand not as high as it once was, but there's just not enough supply in the market to really flip everything on its head. Now, this is a reason, and we're going to talk a little bit more about this in the video though, but a big reason for that is that if you got a mortgage back in 2016, 2017, when rates were 4%, rates I think are right now about 4% as well. So we're basically back to where you were in 2017. There's really no reason to go, selling your property and then buying a new property, because yeah, you'll get a high amount of money for the property you're selling, but you also have to go buy another property. In the same situation, it was different last year because, and in 2020 specifically, like right around July, August, when I bought my property, because you could sell your property for more than it was worth. Let's say you bought in 2015, 2016, 2017, 2018. Let's say you bought your property for 200 grand. It's now worth 340 grand and your rate is lower. So you're going to go get a 4%, you're going to get rid of your 4% rate and go buy a 2% rate, and you're going to cash out some money. That's why it was a lot better for people to be selling, but now there's really no reason to sell your property. Let's go through this. The pain in mortgage market is only getting worse as higher interest rates and inflation hammer the American consumer. Mortgage demand fell more than 6% last week compared with previous weeks, hitting the lower level since 2000, according to Mortgage Bankers Association seasonally adjusted index. Applications for a mortgage to purchase a home dropped 7% in a single week and were 19% lower than the same week in 2021 because rates are higher, obviously. Buyers have been contending with prices all year, but with rates at almost double what they were in January, they've lost a considerable amount of purchasing power. And we talked about purchasing power before. I didn't even know they were going to talk about that in this article. We talked about purchasing power before. The difference in rates could be thousands of dollars per month when it comes to your mortgage. Quote, purchasing activity declined for both conventional and government loans as the weakening economic outlook, high inflation, and persistent affordability challenges are impacted buying demand. While buyers are less affected by weekly moves in interest rate, the broader picture of a rising rate has already taken on its toll. Mortgage rates moved higher again last week after falling slightly over the past 3 weeks. The average contract interest rate for a 30-year fixed mortgage rate conforming loans, $647,000 or less, increased to 5.82% from 5.74%, with increasing points from 0.65 to 0.59, including the origination fee. For loans with a 20% down payment, that rate was 3.11%, same last year. Like I said, if you would have had a 3% interest rate last year, your interest rate now could be 5.8 or 5.7, which when it comes to purchasing power is a massive difference. Demands for refis, which not a lot of people are going to be refining right now, right? I've contemplated refining this property because I have about $110,000 in equity that I've made within the past year. It's just not worth it. Which are highly rate sensitive, fell 4% for the week and were 80% lower than the same week last year. Rates are higher, you have no reason to refi. Those applications are also at a 22-year low, but the drop in demand from home buyers caused the refinance share of mortgage activity to increase 31% of total applications from 30.8% in the previous week. Mortgage interest rates haven't moved much this week, but that could change very soon due to the bond market volatility. Federal Reserve is expected to hike rates by another 75 basis points next week, and other central banks are taking similar action against inflation, a basis point equal to 0.01%. Quote, it's especially true next week as the market digests the newest Fed policy announcement, which will be next Wednesday, but Thursday's policy announcement from the European Central Bank could also cause enough to stir impact in U.S. rates, noted Matthew Graham, Chief Operating Officer of Mortgage News Daily. Now, the other thing to note, and I'm not going to play this video, are new home constructions have also dropped as well, which is not a good sign. So I don't know, this is not showing that the market's going to crash. I don't want this to be like a housing market crashing video because it's not what this is, but what you do have to realize is that there is still demand, but it's slowing. The amount of supply right now is still low because there's not a lot of people selling their properties. There's just really no reason to, but we're seeing that growth drop. And across the board, there's one thing I want to note, and I put 2 videos out on our other channel, Traders Helping Traders, that specifically talks about trading, but we've seen Apple come out in the past 2 days saying that they're going to slow their hiring process. So Google come out today, say that they're going to pause their hiring process. You look at the economy as a whole, when growth starts to slow and we start to see high inflation like we are, that is not a good sign for the market. So I hope the real estate market crashes so I can get in. It might not happen. Normally, real estate market lags 12 to 18 months behind the stock market, but this is something to watch for. This is something to pay attention to. If you guys want me to do more videos on real estate, I can do so. I'm actually starting a video series here that I'm going to do within the next couple of weeks, talking about what I would do at $10,000, $25,000, $50,000, $100,000, and $1 million. I think it's going to be a really fun video. This channel is going to be based more around investing, not just in the stock market, but investing in general, business building in general, so many different things that I want to talk to you guys about because this is my love. Like, investing is my love. Business building is my love. Marketing and sales is my true passion, my true love. And I started long-term investing videos and just trading videos in general on this channel a year ago, 2 years ago, because so many people wanted them. We have our other channel, Traders Helping Traders. This is going to be all about building long-term wealth. I hope this video serves you well, guys. I hope you have a great day, and I'll see you next time. Peace.